I guess like corona out the lockdown session. We are back again with accounts. Too many questions given us over, I guess. Uh, Students, do post your queries as well. Okay, എപ്പോഴൊക്കെ ഡൗട്ട് ഉണ്ടോ എന്തൊക്കെ വരുന്നുണ്ടോ ബീങ് ദി ഫസ്റ്റ് ടൈം നമുക്ക് മീഡിയം മാക്സിമം ട്രൈ അപ്പൊ എന്തൊക്കെയാണോ പ്രശ്നങ്ങൾ വരുന്നത് എവിടേക്കൊക്കെയാണോ ഗെറ്റിംഗ് സ്റ്റക്ക് ഡു മെസ്സേജ് മീ so that we'll sort it then and there. Okay. WhatsApp group, you can also use the WhatsApp group so that we'll clear out all the queries there as well. Okay. So okay. So we were dealing with insurance the last day. Insurance claims was the topic that we were dealing with. We also discussed that we have two types of loss actually. Okay. One was loss of stock and the other one was loss of profit. So the loss of stock part we have already done with. We drew the trading account and we found out what is the actual closing stock that we have lost. Now the next part would be we'll have to deal with what is the loss of profit. So Nano, what do you mean by loss of profit? I guess I have given a short brief intro of what loss of profit means. Another example as in if you're dealing with like we had a situation of Obron Mall getting fire in there. No, there was a fire happening in which happened in Obron. So because of this, they could actually not run the business for maybe 2 or 3 months. Okay. So what actually happens in this 2 or 3 months, they'll not be able to carry out business over the profit now that is being affected. Okay. So what we have to do is we'll have to understand how much is the loss which is incurred by foregoing the business during those 3 months. Is everyone in pace? Like, could you please give me a message? Are you able to follow? Is the video audible? Is the audio audible? Please give a message regarding that so that I can keep a track of it. Okay. Video is lagging. All right. Now Harshita is are you able with the video? Like, is it clear now? Oh, sorry. All right. Please do keep on responding, okay? So that I get a feedback of that. So based on that, I'll be able to make the changes here as well. Okay. So we'll just continue with the topic, or maybe I'll just check out the messages. Please do respond. Like, is it okay for everyone? Please. Okay, I'm getting the message. Okay. All right, everyone. Video is a bit slow. Audio is fine. Okay. Ria, okay. Bagan, there is a connectivity problem, right? Like the pace with which I'm telling and the one which you're getting it might not be matching, right? Okay, Varun. Okay. We'll just see for 10 minutes how it works and then we'll find an alternative for that. Okay. Audio is fine. And by the way, do you all remember this topic, like loss of profit or loss of stock? Rather, we have not actually started with loss of profit. Loss of stock. How do you feel that? Do you remember that topic? Okay. Okay. So we'll do one thing. We'll straight away start with loss of profit. Okay. I'll just continue the topic that I was dealing before. Okay. All right. So as I said, loss of profit, and I explained what is loss of profit because when a fire happens in a business for 2 or 3 months, there will not be business running in. So our periodical loss in the you call as loss of profit. So we'll do one thing. We'll straight away take a question, like the usual routine. We'll straight away take the question. We'll analyze the question and then get to know what are the different terms used in that. Okay. So I guess everyone is having their textbook with you. Okay. Everyone have your textbook and take page number 10.23, illustration 8. Okay, have everyone taken your textbook? Okay, it's the usual scenario that we deal with. Like, we'll be taking up a question and we'll get the concepts cleared in that. Just let me know if everyone has their textbooks and if the pages are taken. I guess Anu, Ria, Alina, all they have their textbooks. Madhura, Saurav, Bagan, Ria. Okay. Page 10.23, question number 8. Harshita. Okay. All right. I guess we have all the participants in the loop. So I'll start explaining the question. Okay. So I'll read out the question, different from the usual scenario, wherein you used to read the question and we discuss it out. I'll be reading it out. Okay. And I'll make the basic note. We'll understand the question. We'll analyze the question. So, okay. All right. See, I'm just reading out the question. I'm making out the basic data, which is our working note 1. Okay. And I would also want you to write it along with me, okay? Just the question part. Do along, okay? A fire occurred on 1st February 2002. So the date of fire, date of fire, 1st February 2002. Okay, in the premises of Steel Limited, a retail store and a business was partially disorganized up to 30th June. So from 1st of February to 30th of June 2002, the business was run. The company was insured under a loss profit. So the insurance company, what they have taken is they have taken a loss of profit, and the policy amount, the policy amount is 1,25,000 with a 6 months period of MI, which means the insurance company will be covering the losses for a period of 6 months. Okay. So from the following information, compute the amount of claim as the usual situation. That is the question. So you'll have to compute the amount of claim under the loss of profit policy, assuming entire sales during interrupted period was due to additional expense. Now listen, there's something called as additional expense. We need to know what that is. What do you mean by this additional expenses? Okay. So, another additional expenses. That is during the period of loss, entire loss or during the period of fire and after break period, entire loss we'll incur some additional expense so that the loss is not that huge. Okay, to some extent we'll be able to reduce the loss. Adine vendite nammal encourage cheyyunnathaanu additional expense. Clear on that? Okay, message me. I'll keep a track of that. After just giving a brief description about the question, I'll keep a track of the messages. Okay, posting your queries. Every any doubt and again, feel free to ask. You know that better. Okay, continue with the question. So actual 1st February to 30th June. The date of fire was 1st of February 2002. And to 30th of June, which means a period of 5 months. Usually, just given. I'm sure that you are in the loop. Okay. So from 1st February to 30th June, a period of 5 months we have. It is this period of 5 months that the business was affected. പക്ഷേ, since we had incurred an additional expense, even during those 5 months, that is from 1st of February 2002 to 30th of June 2002, they could make a turnover of 80,000. They had taken a room for renting, renting a room. So they could do business in this room and they could make a turnover of 80,000. Rather than being the turnover as zero, or 80,000 the turnover they could achieve. Okay, so the turnover from 1st of February 2002 to 30th of June 2002 is 80,000. Now, 1st of February, turnover from 1st of February 2001 to 30th of June 2001. That is 2 lakh. Okay, we'll see to that. I'm just note down the question, the points in the question, and then over point we'll see. Okay, so from 1st of February 2001 to 30th of June 2001, turnover is 2 lakh. Now, at the point, February 2001 to 31st of January 2002, the turnover is 4,50,000. Okay. So, we keep more just brief it out. Okay. 2 lakh. Turnover from 1st February to 30th of June 2001, meaning that is the standard turnover. Okay, the standard turnover. Standard turnover is nothing. Like, did you get the point of standard turnover? There was a missing. So just let me know if the question, if you could get a hold of the standard turnover. Was that clear for you? Another, give me a message. Turnover portion was clear, or rather, should I start from the entire from the starting? The question part was okay. Till which point you could get a grip of it? Let me know that. Like, was standard turnover and annual turnover clear? Message. Do message. Okay. I'll start with standard turnover. Fine. Perfect. I got the message from few. So I'll start with standard turnover. Okay. Listen. So back to our topic. എന്താണ് സ്റ്റാൻഡേർഡ് ടേൺ ഓവർ? ലിസൺ, ഇത്രേ ഉള്ളൂ പരിപാടി. വെരി സിമ്പിൾ. സിംപ്ലി പുട്ട്, 1st of February 2002 to 30th of June 2002 ആണ് നിങ്ങളുടെ ഫയർ വന്നിട്ട് പ്രോബ്ലം ഉണ്ടായ പീരീഡ്, wherein you were not actually able to do the business. Exact same period in the previous year. Okay, അതാണ് സ്റ്റാൻഡേർഡ് ടേൺ ഓവർ. I repeat, in the current year, for a period of 5 months, your business was affected. So the exact same period in the previous year is called as standard turnover. ഇത്രേ ഉള്ളൂ. ആ ചുമ്മാ ഇയേഴ്സ് മാറ്റുക. If it was 2002 in the previous one, which is the actual turnover, this we call as the actual turnover. Okay. So our actual turnover in the years ചുമ്മാ മാറ്റി കഴിഞ്ഞാൽ just to the previous year, you get the standard turnover. I hope it's clear. Okay. ഒന്ന് expense നിങ്ങൾക്ക് കിട്ടുന്ന ടേൺ ഓവറിനെയാണ് യു കോൾ ആസ് ആക്ച്വൽ ടേൺ ഓവർ. സ്റ്റാൻഡേർഡ് ടേൺ ഓവർ ഒന്നും ചെയ്യാനില്ല. യു ജസ്റ്റ് ഹാവ് ടു മേക്ക് ദി ഇയേഴ്സ് ആസ് ദ പ്രീവിയസ് ഇയർ. ഓക്കെ, ഈ വർഷത്തെ അതിനെ മാറ്റിയിട്ട് ആ ഇയർ തൊട്ട് മുന്നത്തെ ഇയർ, അതാണ് സ്റ്റാൻഡേർഡ് ടേൺ ഓവർ. Now what about annual turnover? Annual turnover എന്ന് പറഞ്ഞു കഴിഞ്ഞാൽ, see, the fire happened on 1st of February 2002. 1st of February 2002-നാണ് നിങ്ങൾക്ക് ഫയർ ഉണ്ടായത്. Exactly 1 year before that. That is called as annual turnover. Okay, exactly 1 year before the actual, or rather the fire date. If 1st February was the fire date, 1st February 2001 fire date, അതിന് മുന്നേ ഉള്ള 1 year period is called as the annual turnover, which means from 1st of February 2001 to 31st of January 2002. Only point that you have to remember is ഇത്ര കാര്യങ്ങളേ ഉള്ളൂ. The fire happened on 1st February 2002. അതായിരിക്കും നിങ്ങളുടെ ആനുവൽ ടേൺ ഓവറിന്റെ എൻഡ് പീരീഡ്. ഓക്കെ, 31st of January 2002. അത്ര മാത്രമേ ഉള്ളൂ. ഫയർ ഉണ്ടാവുന്നതിന് തൊട്ട് മുന്നേ ഉള്ള 1 year you call it as the annual turnover. Nothing more, nothing less. So 3 main points with regard to the turnover. Very important points with regard to turnover. ഇത് must ആയിട്ട് അറിഞ്ഞിരിക്കണം. Okay, without that you will not be able to get a hold of it. One is actual turnover, which is a fire and diagonal period turnover, and the next one is the standard turnover. Exactly in the previous year, same period exactly in the previous year, അതിനെയാണ് standard turnover എന്ന് വിളിക്കുക. And then you have annual turnover, meaning if fire occurred on 1st of February 2002, exactly 1 year before, you call as the annual turnover. Okay, so 3 main points with regard to turnover. One is actual, the other one is standard turnover, and one is annual turnover. And then we have few more additional steps given in the problem. We'll see to that. കൂടുതലും ഈ 3 points ആണ് ഫോക്കസ് ചെയ്യേണ്ടത്. Net profit for the last financial year. So as in the previous year, what is the turnover എന്നുള്ളതാണ് പറഞ്ഞേക്കുന്നത്, which is or rather the profit, which is 70,000. Okay, we'll see. ഓരോന്നും ആവശ്യമുണ്ട്. Insured standing charges, another point to be noted. What do you mean by standing charges? Okay, എന്താണ് standing charge? Listen, എത്ര ഉള്ളൂ. You've learned in your costing as fixed charge. What is fixed charge? Whatever your turnover, howsoever the company runs, you're bound to incur certain expenses like rent. നിങ്ങൾ കമ്പനി പൂട്ടിയിട്ടാലും കൊള്ളാം, പൂട്ടിയിട്ടില്ലെങ്കിലും കൊള്ളാം, you are bound to incur this amount of rent. Okay, അതിനെയാണ് you call as standing charge. So it is nothing but, standing charge is nothing but the fixed charges that you incur. Okay, classic example is rent. Suppose എന്തെങ്കിലും employee isn't a പ്രശ്നം കാരണം you are not able to run the business. Let's assume it that way. Even if that is the
Students, back to topic. Was okay. Standing charges, right? That was not clear. No. Is it? Okay. I'll do one thing. I'll explain standing charges once more. Okay. See, listen to the screen. We have standing charge. We have standing charge is nothing but your fixed cost. Okay, it is nothing but your fixed cost. We have learned in costing. In that, what is fixed cost? What is fixed cost? For you, keep on messaging. Okay, so I'll explain in the meantime. Those expenses which you are anyhow incurred to, or rather bound to incur. Okay, എന്തൊക്കെ വന്നു കഴിഞ്ഞാലും incur ആവും എന്ന് ഉള്ള expenses. Okay? Clear on that? Okay. Suppose even if you are not running the business, you will be incurring that expense. Adiniyana you call as fixed cost. Just what you have learned in your cost. Say classic example as your rent. Suppose employees they raise some issue, and because of which you had to shut down your business. Let's assume it that way. Even if that is the case, you will have to pay the rent to the landlord. Landlord പറയോ employees work ചെയ്തിട്ടില്ല, so you don't have to pay the amount. They'll definitely not say that. So whatever be the case, you will be incurring certain charges, certain fixed cost, and അതിനെയാണ് you call as standing charges. In the insurance, the terminology is slightly changed. You call it as standing charge. Okay, and we have two types of standing charge. Okay, I'll just Okay, we have two types of standing charge. One is insured standing charge, and the other one is uninsured standing charge. Insured standing charge is those which are covered by the insurance company, which means once, suppose you are making some loss or something, this amount will be reimbursed by the insurance company. Adiniyana you call as insured standing charge. Okay, and what is uninsured standing charge? The total standing charge, or rather the total fixed cost minus, okay, total standing charge, or rather the fixed cost minus the insured part, which is the amount you can get, or rather you can claim from the insurance company. Insured charge. Okay, insured charge, you call it as the uninsured standing charge. Clear on that? So the total standing charge, or rather the total fixed cost, minus how much amount you can claim it from the insurance company, you will get the uninsured standing charge. So in the question that we were dealing before, the standing charge given, or rather the total standing charge given, was 64,000, and the insured standing charge was which amount you can claim from the insurance company, that was 56,000. So uninsured standing charge, clear, 64,000 minus 56,000, you get the uninsured standing charge, which is nothing but 8,000. Okay ആണല്ലോ? So ഇത്രയും കാര്യങ്ങളായി standing charge ആയി, uninsured standing charge ആയി, and total standing charge ആയി. Fine. Now back to the question. We have turnover for the last financial year. എത്രയാണ് previous year total turnover എത്രയാണ് എന്നുള്ളതും it is given. Okay, we'll see. ഓരോ പോയിന്റിലും നമുക്കത് compute ചെയ്തെടുക്കാനുണ്ടാവും. We'll see the different steps. I'm just giving a brief intro about the question. Baki we'll get a hold of it. Okay. Now, the next point given is how much is the additional charges, or rather additional expenses incurred. Okay, how much is the additional expenses incurred? 6,700. Additional expenses, as I explained before, see, when Obron caught fire, they could not run the business for a period of 3 months, let's say. So in those 3 months, they took another account, or rather, they took another building, and they did business in this building. അപ്പൊ അവിടെ വരുന്ന റെന്റ് ചാർജസ് അതിനെയാണ് ഈ അഡീഷണൽ എക്സ്പെൻസസ് ആസ് ഐ എക്സ്പ്ലെയിൻ ബിഫോർ. സോ അഡീഷണൽ എക്സ്പെൻസസ് ഇൻകേർഡ് 6,700. So as it is said, which reduced the loss in turnover. Because of this additional expenses, ഒരു ടേണോവറും കിട്ടുണ്ടായിരുന്ന സ്ഥലത്ത് നിന്ന് they could actually get an actual turnover of 80,000. കുറച്ച് turnover they could make or they could get because of this additional expense. Now, there was a saving during the indemnity period. ഒരു കുറച്ച് സേവിങ്ങിന്റെ കാര്യമുണ്ട്. We'll see saving during the indemnity period of rupees 2,450 in the insured standing charges. നമുക്ക് നോക്കാം എന്താണെന്നുള്ളത്. We'll see. Another point, there had been a considerable increase in trade since the date of last annual accounts, and 15%. This is also very important. Athayathu, if in the previous year your turnover was, let's say, 1 lakh, okay, 1 lakh you will be able to make a 15% growth in the current year, and you will be getting you will be able to make a turnover of 1,15,000. Adana 15% increase in പറഞ്ഞേക്കുന്ന. ഇത്രേ ഉള്ളൂ. If in the previous year your turnover was 1 lakh, അതിന്റെ കൂടെ you will be able to make a 15% increase, and in the current year your turnover will be 1,15,000. General increase in trend or in trade. അത്രയാണ് പറഞ്ഞിട്ടുള്ളൂ. Okay, so these are the question. In short, I'll just narrate out which are the different new terms that you have learned. We have learned what is standard turnover. We have learned what is actual turnover. We have learned what is annual turnover. We have learned what is total standing charges. What is insured standing charge? What is uninsured standing charge? Okay, these are the 5, or rather 6 major topics, or rather points, new points that you have heard. So everyone, do let me know, do message ഈ 6 പോയിന്റ്സും ക്ലാരിറ്റി ഉണ്ടോ ഇല്ലയോ എന്ന്. 6 പോയിന്റ്സ് എത്ര മാത്രം അറിഞ്ഞിരിക്കേണ്ട കാര്യമുള്ളൂ. ആൻഡ് നെക്സ്റ്റ് ഇസ് കേക്ക് വാക്ക്. ബിലീവ് മീ, ഈ 6 പോയിന്റ്സിൽ ഏതെങ്കിലും പോയിന്റ് ക്ലിയർ അല്ലാത്തുണ്ടെങ്കിൽ മെസ്സേജ് അയക്കൂ. അതിനുശേഷം വിൽ പ്രൊസീഡ് വിത്ത് all these 6 points. Fine. Okay, good. Preena, Ria, Varun, Anandu, Donna, Bagan, Savrav, Trullo. Thomas, standard turnover is not clear. Ano. Is it so, Thomas? I have to explain standard turnover. Okay, okay. All others, everything is fine. Okay. Thomas, Trullo, standard turnover. See, 1st of February 2002 to 30th of June 2002 is the fire period. Okay, standard turnover ഈ രണ്ടിനെ മാറ്റിയിട്ട് ഒന്നാക്കുക. Previous year. Okay, 1st of February 2001 to 30th of June 2001. A same period, fire in the same period in the previous year. Is that fine, Thomas? Okay ആണോ? സ്റ്റാൻഡേർഡ് ടേൺ ഓവർ ഫയർ ഉണ്ടായിരിക്കുന്ന ഈ വർഷത്തിന്റെ തൊട്ട് മുന്നേ ഉള്ള സെയിം പീരീഡിനെയാണ് യു കോൾ ആസ് standard turnover. Okay, fine. So these are the main 6 points that you have to understand, or pudhiya words that you have learned. Now, based on this, namukku question cheyam. Okay, so basically I'll be dividing this into no sound. Okay. Is it clear now? Is the audio clear, everyone? Audio, am I? Yes. Okay. All done. Cool. Fine. I'm glad that I'm getting the participation from every student. Good going. We'll proceed with. So, any question in the answer part. So we have just analyzed a brief analysis of the question. ഇനി എങ്ങനെ സോർട്ട് ചെയ്യാം? See, listen. I'll break it into 2-3 steps. Major at 3 steps. We just have 3 steps. Okay, 3 steps. And in this 3 steps, obviously, we'll have 1 or 2 working notes as well. Okay. So the first step number 1. Keep it this way. Step 1 is short sales. Computation of short sales. Okay. See, I'll write a bit. I'll tell you when you should note it down. Just listen, and only after I tell you when you should take it down, you need to do. Okay? Just listen carefully. First is short sales. Step number 1 is short sales. What do you mean by short sales? Short sales. How much you actually expected to get a turnover? Okay, what is the actual expected turnover and what you have actually received? Short sales. Listen, what was the standard turnover? Standard turnover. Question mark ചെയ്തിട്ടുണ്ട്. You know what is the standard turnover? It is 2 lakh. Just a second. Okay. Standard turnover is 2 lakh. And as I said, a 15% growth rate is increased or is expected. So add 15% growth expected, which is 30,000. So 2,30,000 is the turnover that you expected. Network connection. Screen is stuck. We'll see.
Hello? Hello? Cut it.
Be done. Step 1. Is it all clear, everyone? Like, is the audio is clear and audio and video clear? Give me a message. Audio and video, is it fine? Okay, fine. So, Anandu, Donna, Elleverum. Okay, fine, perfect. So, we'll get back to this. Listen. Step 1, short sales. Listen, as we said, standard turnover, we have 2 lakh. We expect a normal increase of 15%, so 30,000. And on a normal base, we expect our turnover to be 2,30,000. Okay. Whereas, what is your actual turnover? You could make an actual turnover of only 80,000. It is there in the question. The actual turnover is only 80,000. So how much is the difference? The difference, which is nothing but 1,50,000. This is what is called as short sales. Well done. How much is the amount or rather the turnover that you expected? How much you actually got? Okay, you expected for 2,30,000, but because of fire, you could get a turnover of only 80,000. Short sales. The loss in turnover is nothing but short sales, which is 1,50,000. Clear on that? What is short sales? And the point to be noted is short sales is actually not your loss. This is not your loss. Whereas the profit in this part, okay, turnover, what is the profit? Our profit is actually your loss. Okay, short sales is your first step. I just clarified that. In the go, I clarify and we'll come to the step. Short sales is the turnover lost. That is actually not your loss. Your loss is the profit lost on this turnover. Okay, we'll see to that. For the time being, you just have to get a track of the short sales. So just take this down, everyone. Just compute your first step or write it down. Short sales portion. I want everyone to write this down. This is your first step. First step. How simple it is. See, you just have standard turnover, 15% increase. 2,30,000 is the turnover expected, whereas your actual turnover is at 80,000. The difference is short sales, 1,50,000. Write it down. Administration, give me a message and let me know. Okay, note this down. 2 to 3 minutes, maybe more than enough, I guess. Note it down, everyone. Administration, do let me know. Okay, do message me. Okay, Devika done, Anandu done. Madhura, okay, good. Harshida, fine. Donna, Bagan. Priya. Good. Okay, everyone. All done? Yes. I guess everyone in the loop. All right. So you understood what is standard turnover. Short sales. Now, back to the next step. What is actual turnover? Actual expenses. Step 2. The additional expenses that you incur. Okay. Step 1 is short sales in the computation. Step 2 is additional expense. Here, there is a bit clarity that you need, or rather, we'll start it this way. Additional expense is nothing but it is the least of following 3. Least amount. Okay, least amount you call as additional expense. First one, what is your actual additional expense? What is the actual additional expense? Which we have already, or we'll come to that. And next one is a formula based computation, and the next one is GP on GP due to additional expense. We'll see to that. Okay, so in order to work out these, we need to have few formulas or few working notes for this. You will need 2, 3 or 1 or 2 working notes for this. You will have to compute GP percentage. So we'll see to that. Actual additional expense is nothing but what is the actual expense that you have incurred or actual additional expense that you have incurred. The question, just listen to the question as well. Incurred additional expense. We have taken a small building for rent purposes. Apart 6,700 ആണ് ആ building കൊടുത്തേക്കുന്ന rent. So 6,700 is the actual additional expense incurred. Okay, and the next one ഒരു formula based സാധനമാണ്. We'll see, which is nothing but additional expense into GP on adjusted annual turnover whole divided by GP on adjusted annual turnover plus uninsured standing charges. Do one thing, students. Just take down the first one. Step 2, additional expense എന്ന് പറഞ്ഞ heading കൊടുക്കുക. Least of point A actual additional expense is equal to 6,700. അതുവരെ ഒന്ന് എഴുതൂ. And in the meantime, because the second one formula കുറച്ചൊന്ന് workout ചെയ്യാനായിട്ടുണ്ട്. I'll explain it out. Just do this. Just note it down, everyone. Now, first step matram cheyu. Second formula based part I'll explain that. Just write down the actual additional expense. After you take it down, you just let me know. Completed. Okay, done. Savrav, Bagan, Priya, Thomas, Madhura, Alina, Anandu, Donna, Varun, Harshita. Okay, all cool. Now the second one. Devika, fine. See, formula based. Listen. What is the additional expense? Which you already know. Additional expense 6,400. Yeah, sorry, 6,700. 6,700 as the additional expense. We know uninsured standing charge. We have computed it is 8,000. So the only one or only data which is missing is GPAT, which is nothing but gross profit on adjusted annual turnover. Okay, GPAT, nothing but gross profit on adjusted annual turnover, for which you will have another working note. Other than it is a separate working note. Listen. GPAT GPAT the working note computation listen what is annual turnover? Annual turnover in the question note how much is our annual turnover? Listen, 4,50,000 is our annual turnover. Okay, and the normal increase percentage turnover growth that we are expecting, it is 15% increase that we are expecting. So 4,50,000 50% increase calculators use here. 67,500. 5,17,500 is the adjusted annual turnover. Okay, use your calculators. 4,50,000 is the annual turnover. Along with that, 15% increase in so 67,500 is the increase that you expect. So adjusted annual turnover is the total of that. 5,17,500 is the turnover that you expect. That's the adjusted annual turnover. Up in the GPAT. You will have to compute profit on this. At 300 GP percentage. Now the working note is required. Okay. GP percentage. GPAT is nothing but the profit on this. This is working note number 1. GPAT will have to compute profit on this on turnover, which is working note number 2. Computation of GP percentage. Okay. GP percentage in the formula. What is GP percentage formula? GP divided by sales in 100. Yes or no? There is a small change. GP by sales into 100 is what we have all learned. But this is not what we are going to do. Instead, net profit plus insured standing charge divided by turnover. All these are relating to the previous year. I'll tell you the logic behind. Listen. You have why is it like this? Another question down. Why is GP percentage GP by sales into 100? Why is it not that? Why all these formula net profit plus insured standing charges by divided by turnover? I'll tell you the reason. Listen. We all know that GP minus your indirect expenses. Net profit. Yes, GP minus your indirect expenses, you get your net profit. Up in the GP. Net profit plus expenses. Yes or no? GP minus your expenses is net profit. So net profit plus expense, you get your GP. Only than this. When it is insurance, only the insured expenses will be covered. We will be able to claim it from the insurance company. Uninsured expenses cover. That is the only reason why we are taking it as net profit plus insured standing charges by turnover. Clear on that? So GP by sales into 100 Allah, this is by sales into 100 Allah. This is not the formula that we are using for insurance purpose. Instead, the formula that we are using is net profit plus insured standing charges divided by turnover and 100. It's the process. Okay? So, and from where do we get all these? Nothing more. Not a big deal. Net profit. Previous year it is given 70,000 is the net profit. Insured standing charges is 56,000. Previous year the turnover is 4,20,000 into 100. Use your calculators and give me the answer. It is 30%. Your GP percentage is 30%. Okay, you get your GP through the process. So back to our working note number 1. GP 18 compute an item. 5,17,500 is the profit, turnover that you have received. In this 5,17,500, you will have to apply 30%. 30% apply here. How much is it? 5,17,500 into 30%. Your GP80 is 1,55,250. This is it. Okay, this is the process. Important GP80, gross profit on adjusted annual turnover, 1,55,250. Okay. All done. Complicated. I understand. Board. I'll explain it out. Do one thing. Then dictate in the beginning. Okay. So point B, you have written this formula based. Formula based, you write down this formula. Everyone, formula based. Point B, formula based. Additional expense into full line. Okay, don't use short forms. Gross profit on adjusted annual turnover, whole divided by gross profit on adjusted annual turnover plus uninsured standing charges. Leave some space. Okay, you have one more point coming up. Leave some space. Adhanashesham, you write working note number 1. Okay, just take down this formula. Okay. Take down this formula. Additional expenses into gross profit on adjusted annual turnover, whole divided by gross profit on adjusted annual turnover plus uninsured standing charges. formula. I'll guide you with that. All done? Keep messaging. Message. Yes, done. Madhura, Anu, Pagin, Devika. All in track. Good to know that. Varun, Saurav, Thomas, Harshita, Shankar, Alina. Okay. All cool. Good going. Now, leave some space. We have one more point coming up. Maybe you can leave about half a page you do. And you write working notes, working note number 1. Working note number 1. Working note number 1. Computation of GP80. Computation of GP80. Gross profit on adjusted annual turnover. Take this down. Annual turnover is equal to increase you get your adjusted annual turnover and then GP80 a percentage, which will be your working note number 2. For working note number 1, you will be giving a reference to working note number 2. Okay. And I'll give you the other one. After you complete, give me a message. All done? Madhura, okay. Harshita, Devika, okay. Shankar, Anu, Varun, Donna, Sandra just joined. Bagin, Preena, all cool. I guess everyone has taken it up. Now, working note number 2, computation of GP percentage. Okay. Anyone who has lost a track of it, do message that also. Okay. If it is not complete, do tell me. Feel free. You can message me. I'll stop it then and there. Okay. So working note number 2, computation of GP percentage. Anyone yet to complete, message me. Computation of GP percentage. You write down the formula. Computation of GP percentage. You write down the formula. Net profit plus insurance standing charges whole divided by turnover. And you can also have the formula. Compute the percentage. Well done. Do message after you complete this. All done? Okay. So we are done with the second step as well. Okay. Now, the third point. See, third point is nothing but because of this additional expense, what is the turnover increase that you got? Okay. Only because of this additional expense, what is the turnover increase that you got? And the GP percentage on this turnover. Okay, listen carefully. Because of this additional expense, 6,700 is your additional expense. Because of the 6,700, how much was the increase in your turnover? Increase. Okay, so point number C, wait. Okay. Point number C is nothing but due to additional expense, how much is the increase in turnover? Okay, due to additional expense, how much is the increase in turnover? How much is the GP percentage on this increased turnover? Clear on this? ഇതാണ് മൂന്നാമത്തെ point. Because of the additional expense, what is the increase in the additional increase in the turnover that you got? And in this turnover, how much is the GP percentage? Okay. Now read the question. You'll have to read out the question carefully. Arrange a pointer. Nowhere in the question it is said because of this additional expenses, additional turnover nowhere in the question it is said. Okay. So there is in two ways you can do it. Okay, there are two possible assumptions. Even in exams, you can follow this. Assumption number one. The entire turnover, the actual turnover is fully because of this additional expense. The entire actual turnover is fully because of this additional expense. That is assumption number one. Assumption number two, which is also accepted in the textbook, also this method is followed. Since the question is not clear of the increase in turnover, we are just skipping it out. Okay? Both ways acceptable. Assumption number one. See, question work out. Assumption number one, the actual turnover, the entire actual turnover that you got is because of this additional expense. Assumption number two, since the question is not clear, because in certain questions, second question clear right, it was mentioned in the question. Assumption number two, the turnover, since the question does not clearly specify, we are just ignoring it, or we'll mention it as the question does not clarify how much is the turnover increase due to additional expense. Okay, additional expense on the matram. What was the increase in turnover is not explained. Both ways accepted. Okay. Excuse me. Is the audio clear? I guess the audio is clear. Is the audio clear? Message. Okay. Do message. Okay. What about the videos? Is the video also fine? The screen? The screen is also fine? Okay, cool. Fine. Okay. So assumption two, the question does not clarify how much is the turnover increase due to additional expense. Additional expense on the increase in turnover is not explained in the question. Okay. You can take it either way. So in this question, I'm following this because the question has no clarity absolutely as to how much is the increase in turnover due to additional expense. So assumption two one and follow this. So what do you have to do is, okay. So point C alligator, you write it down. See, in the second step, you have written it as point C, and then you note this. You note down this. The question does not clarify how much is the turnover increase due to additional expense, and hence taken it as nil. Okay. In between. The point B, ഒരു ചെറിയൊരു പോയിന്റ് മിസ്സായിട്ടുണ്ട് എഴുതാൻ. Don't worry. For the time being, point C alligator, write this down. Point B is, I'll help you out. The question does not clarify how much is the turnover increase due to additional expense. Hence, it is taken as nil. I'll repeat it again. The question does not clarify how much is the turnover increase due to additional expense. The question does not clarify how much is the turnover due to additional expense. Hence, it is taken as nil. Give me a text, everyone. Give me a text. Give me a message. Have you written this up? I know point B is pending. We'll do that. I missed it out. Not an issue, not a big deal. Anyways, we have all the figures. Okay. All done? Everyone? Bhagan, Riya, Anandu, Saurav, Anu. Good. Good going. Okay. Just complete this formula as well. You just have to substitute the figure. GPAT, we computed GPAT, but we forgot to substitute in the formula that we wrote. That's it. Okay, so 6,700 into 1,55,250 whole divided by 1,55,250 plus 8,000. That figure would be 6,372. I want you to use your calculators. Okay, use your calculators. Get hold of your calculators as well. Calculator and give me a message once it is done. All done, all done. Yes, yes. Harshita, Saurav, Madhura, Donna, Preena. Okay. Bhagan, Alina, Shankar, Ria. All in low by yes. Okay, cool. All right. So now that we have completed step 2. Okay. Step 2, listen. One is the actual expense. This is the first one. Okay. This is the first one. This is the second one. And the next one, we actually don't have the data. The data is not available. So, as I said, additional expense is the least of the three. So, one is 6,700 and the other one is 6,372. And the third one, the data is not available. The data is not available. So, of this two, which is a list, 6,372 are the least figure. Okay. So, after concluding line to step 2, concluding line to step 2, additional expenses. We'll brief it out later. Don't worry, just take this down. Every point, every sentence, we'll discuss it out. Okay, don't worry about it. Just do a concluding line. No problem. Step 2, additional expense. Moonu points are we took out the least of that, which is 6,372. Okay, just note it down. Additional expense is equal to 6,372. Hence, we're gonna do hence least of the above. Additional expense is equal to 6,372. That is how you write it. Okay. After you write, give me a message. All done? Good. Shankar, Anu, Anandu, Riya, Madhura, Saurav, Preena, Bhagan, Devika, Harshita, Thomas, Donna, Alina. All cool. All done. So we are done with the second step. Don't worry. I know there would be a lack of clarity in the second step. We'll sort it out. No worries at all. Okay. Now, over to the step 3, which is the final step. Step 1 and step 2, we club together and we get step 3. So we have all the things cooked up. Okay, we have the ready figures here and there. You just have to pick up those figures from step 1 and step 2 and your step 3 is done. After all the process. Listen, step 3, step 1 you computed GP or rather short sales. I told you, short sales is actually not the loss, but the profit lost on that is your loss. Upper step 1, GP on percentage on short sales. Which is earlier you have computed your short sales, which is nothing but 1,50,000 into 30 percentage, which happens to be 45,000. Add additional expense, which you have computed in working note step 2. Give step references as well. Here it is step 1. Here it is step 2. It is 6372 minus one more additional point, savings in insured standing charges. Don't write this now. I'll give you time. It is there in the question. I'll tell you what that is. Don't worry. Savings in insured standing charges of 2,450. $2,450, the saving. And the work is done. 48,922 is the claim before applying average plus. Okay, listen. This is the final step. Is the audio lost? All good? Okay. Listen. This is the final step. Each step in a way, you have done all the workings in the background. First one, short sales. Short sales in step 1, we computed what is the turnover that you expected, but what is the turnover that you got? The difference you got it as short sales. So, and as I said, short sales alla nammude nashtam. Instead, what is the profit which is lost on short sales, which is the GP percentage? Okay, 1,50,000 into 30 percentage, which is 45,000 is your first one, which is a loss. Apart, you expected an increase in turnover. Instead, you have a dip in turnover. Because of that, you have lost your profit. So our loss is 45,000, which is obviously your loss. And the second one is because of this fire, you had to incur some additional expenses. And for additional expenses, there are 3 methods. And അതിന്റെ least ആണ് നമ്മൾ എടുക്കേണ്ടത്. അതിന്റെ amount of 6372. If the spire was not there, 6372 expense was not, will not incur that expense. So 6372 is your another expense. Okay. Okay. And now there was some savings in insured standing charges. Let's say, for example, due to lockdown, what about point C? Point C as in? You mean Thomas? Is it in the step 2.C? Step 2.0. Is it that, Thomas? Okay. See, in the step 2.0, we have already done it. We have given an assumption note. Okay. We have given an assumption note. Just see to this. The question does not clarify how much the turnover increases due to which we took the second assumption, that is nil. Zero. The question itself is not clear about it. So you cannot treat it as zero. The answer is not zero, but then we don't have sufficient data to compute the question. Okay, that is it. All right, cool. Okay, fine, perfect. So back to our point. So listen, savings and insured standing charges through See, Uh, because of this expenses, or rather fire, or rather, as I said before, standing charge is a fixed cost. Because of fire, let's say our landlord he gave us a reduction in the rent amount. Let's say 10,000 was the actual rent. Instead, he said, fire you incurred so much of loss. You just have to pay 8,000 in the morning. So you got a saving of 2,000 in the fire insurance, or sorry, in the rent expense. Our 2,000 is what is called as savings and insured standing charges. Definitely, the 2,000 savings, the insurance company will not give it to you. Okay, other than you will not be able to claim that amount because that is a saving already. And how can you ask the insurance company to give that amount? So, savings and insured standing charges, you will have to reduce that. Instead, the formula is just this short sales satra, which is your working note number one. In the short sales, what is the GP percentage? അതാണ് നിങ്ങളുടെ ഒന്നാമത്തെ loss. Second one, എത്രയാണ് നിങ്ങളുടെ additional expense that you have incurred? Wherein you have 3 points, 3 സ്റ്റെപ്പുകളുണ്ട് 3 സ്റ്റെപ്പിൽ you will have to compute. And we take the least of that. And in the final one, step 3, what we does is GP percentage, additional expense. How much is the savings on the standing charges? You take the difference, you get what is the claim before. You know what is average clause? Average clause in there. We'll come to that. Is this point clear to everyone? If yes, note it down and give me a message. Okay. Effectively speaking, you just have two loss. One is the loss in turnover, because of that the profit loss, and the other one is the additional expense. And the loss in business. And there will be some savings in insured standing charges, which you will have to subtract because you cannot claim that to the insurance company. Mono minus a year, you will get the claim. Through process. See, once we get a hold of it, entire process is കുറച്ച് lengthy ആണ്, but still ഒരു first question മാത്രമേ ഒരു confusion ഉണ്ടാവുള്ളൂ. After that, it is a cakewalk. Don't worry. Is it done? Is it clear, everyone? Okay. Savram, Rona, Priya, Devika, all done? Harshita, yes, good. Preena, Anandu, Alina. Good, I guess. Yes, Varun. Thomas. Yes, okay, fine. All done. All right. So this is it. And the last step. One more minor step, which is a continuation of step 3. See, don't worry. Okay, I'll brief you out. You know the system, right? See, now you will have to apply average class. We know what is average class. See, what was the insurable amount? Listen, insurable amount means what is the amount for which you should have actually taken the turnover or the policy. Okay, extra amount in you should have actually taken the policy. That's insurable amount means. What was the actual policy amount which was required? Which was 1,55,250, which is nothing but your GPAT. See, listen. For a year, you expect a turnover. Our turnover, how much is the profit? And it is for that profit that you should take the insurance. Makes sense, right? Profit insurance because additional expense you cannot actually determine based on circumstances you cannot determine. So based on the profit element, we say that how much was the turnover? Our turnover amount profit that you expect. That is the insurable amount. Okay, so that your insurable amount is 1,55,215. And what is the policy amount? How much is the policy amount which is there in the question? The policy amount is it is there in the question. Your policy amount is 1,25,000. Listen, do we have a case of average clause here? You should have taken a policy for 1,55,250 Paksha. You took a short policy. You took it only for 1,25,000. You wanted a saving out of that as well. Okay, 1,55,000 you took a policy of only 1,25,000. So obviously, the insurance company will not give you 48,922 as the claim. Actually, that is your loss, but still you cannot claim that amount. So എത്രയായിരിക്കും നമുക്ക് claim ചെയ്യാൻ പറ്റുക? Listen, ഇത്രേ ഉള്ളൂ. You should have taken 1,55,250, but for which you took only 1,25,000. So how much is the amount which you can claim for 48,922 is the question. 1,55,250 എടുക്കേണ്ടടുത്ത് you took only 1,25,000. So what is the claim amount you can charge it to the insurance company for a loss of 48,922? Simple, right? 1,25,000 is for 1,55,250 into 48,922. The old pens and pencils case. The same case here. Instead of taking it for 1,55,250, you took it only for 1,25,000. So how much is the insurance claim that you can insurance amount that you can claim for a loss of 48,922, which is 1,25,000 by 1,55,250 into 48,920, which is the claim amount. Okay. And the answer is 39,390. This is the final answer. Okay. Take down the step as well. And then give me a message. Just let me know if the entire process is clear. I'll jot down the steps after this. Take it down. Insurable amount. Which is all a part of step 3. Step 3 and a part. All right, Shankar, good. Harshida, fine. Thomas, yes. Madhura, Ria, Bagan, all done, all cool. Waiting for the rest. Take your time. Don't worry. Take your time. Understand the concept and then write it down. Okay? Lena, yes. Preena, Donna, Anu. Andu, yes. Good, good. Good going. All in the loop. Everyone. All cool. All done. I guess everyone has given me a message. Anybody yet to clear or yet to done? Yet to complete this? Anyone? I guess everyone is okay with it. Okay, so this is it. This is the final answer, 39,390. Before you take a break, listen, just to sum up, this is it. Nothing more, nothing less. It's already. Just to sum up of what we have actually done. See, the step 1, you computed short sales. Turnover of the difference is short sales. Okay, so that is your step 1. Step 2, which is a bit complicated. Like that, you just have 3 steps. That's it. Additional expenses. Okay, wherein you have 3 points A, B, and C, and you take the least of these 3 through, and this is the actual. And here it is that GP percentage on increased turnover. Here in this question, we didn't have sufficient data, so we didn't take it down. So additional expenses this. And then you have step 3, which is the final step, wherein you will be clubbing step 1 and step 2. So first one is the GP percentage on short sales. which you get from, and then step 3 is the additional expense, which you get from step 2, and then it is the savings, if any, you get the policy before average clause. Okay, this is it. This is the whole process. Just 3 steps we have. Step 1, short sale. Step 2, additional expense, wherein we have 3 points. First one is GP percentage. Sorry, the actual additional expense. Second one is formula based. We have a what was the formula? GPAT. Sorry, additional expense into GPAT whole divided by GPAT plus uninsured standing charges. And then we have a third point, which is totally based on the availability of data. That is, we have, and the concept is on what is the increase in turnover? What is the GP percentage on that? Okay, increase in turnover, that's the GP percentage. The least and all this. A sum of payra minus the savings. You get the claim. Average close the money claim. And then you just have to apply the average clause, which is pretty much clear because loss of stock loss, we have dealt with average clause. Okay, so this is it. If you just take it down as well because you have a brief idea of what we have done. No complications in it, it's just these 3 steps. That's it. Okay, just take this down as well and then give me a message. And then we can maybe analyze the entire question. Read out the question yourself and then do an analysis of the entire answer. Take about 5 minutes. Okay. Do one thing, take a break for 5 minutes as well. After this, we'll be back by 2:45. Okay. Is that okay? Will you be back by 2:45? All right, Anju, Shankar. Yes, we have Anu, Thomas. Okay, Varun, Alina, Preena. All good. Okay, so back by 2:45. Message me, everyone. Is everyone back in picture? Sabra Vanandu, yes, yes. Everyone good? Okay. All right. All cool. So, how was that? How was the first question on loss of profit? Any doubts to be clarified or anything to be done? Message me, everyone. Is that clear? The first question. See, once you understand the first question, then the rest is fine. No doubts. Shankar, yes, perfect. Priya, yes. Okay, fine. Anandu, Harshita, Anu, Bagan, clear, Donna, Saurav, good, good, good. all in loop, I guess. Everyone, I guess I have received message from everyone. Okay. Right, left. I'll join soon. Some connectivity issues. Once this is done, then as I said, it is very easy. Okay, so we'll proceed with the next question. Take a textbook. We are dealing with the next, which is illustration 9. Okay. On 1st March 2002. So this is our fire date. 1st March 2002 is the date of fire. Okay. And as a result, the business was partially disorganized up to 31st August 2002. So the issue period, all right, was from 1st of March 2002 to 31st August 2002. This is the issue period, all right. The company is insured under a loss of profit. We have the policy amount, loss of profit policy of 1,65,000, which is the policy amount. So we have everything ready hand. Having an indemnity period of 6 months. 6 months is nothing but the insurance company will be covering the loss for a period of 6 months. If
Is the OD clear? Is the OD clear, everyone? Is it okay? Is audio fine? Thomas, is it audible now? Okay, better, fine. Maybe in the go it will be fine. Okay, fine, all cool. So listen. So we have the policy amount also, which is 1,65,000, having an indemnity period of 6 months. So, see, if the loss was for more than 6 months, maybe for about 8 months, then what does indemnity period means that only for a period of 6 months the loss will be covered. For the balance 2 months, the insurance company is not responsible. Okay, that is the meaning of indemnity period. The insurance company will suffer or will take all our expenses or all our losses for a period of 6 months, not more than that. Okay, so here in this question, from 1st of March to 31st August, well within the period of 6 months. And then, see, listen, we have the further details coming up. We have the actual turnover, which is required in our step 1. Actual turnover of 80,000. Turnover for the corresponding period in the 12 months immediately before the fire. What does that mean? Listen, 1/3/2001 to 31/8/2001. The fire period was 1/3/2002 to 31/8/2002. Exactly in the previous year, the same period, which is nothing but the standard turnover. Okay. Now, turnover for the 12 months immediately preceding the fire. If the fire was in 1st of March 2002, immediately before 1 year. Okay. 1st of March 2002, immediately before 1 year. We know what this is. This is our annual turnover. We know what is the net profit for the last financial year, which is required to compute our GP percentage. Insured standing charge, many places we need that. We'll see. Insured standing charge, uninsured standing charge. So 60 plus 60,000 plus 5,000, you get the total standing charge as well. And we also have the turnover for the last year. Okay, cool. So now listen, due to substantial increase in trade before and up to the time of the fire, it was agreed that an adjustment of 10%. What is that actually? It is the percentage increase. We expect that if the previous year turnover was 1 lakh, we expect a 10% increase and it will be 1,10,000 in the current year. So 10% upward trend is the increase that we expect in turnover. Now, the next point is very tricky. Listen carefully. The company incurred additional expense amounting to 9,300. Okay, so we have the data of 9,300 additional expense immediately after the fire. And but for this expenditure, the turnover during the period of dislocation would have been only 55,000. Listen very carefully. This is required for our step 2. Listen.
See, our actual turnover, our actual turnover is 80,000. And in the last sentence, the question says, if the additional expense was not incurred, okay? If the additional expense was not incurred, your turnover would have been only 55,000. Clear on this? So it is just because that you incurred an additional turnover, you could make a savings. You could, or rather, you could increase your turnover. So if that additional expense was not there, your turnover would have been only 55,000. But because you incurred an additional expense, your turnover was 80,000. Clear on that? And this was the point which we'll need in your step number 2, the point number C. Okay? So fine. So this is it. This is the only additional adjustment which we'll be seeing in this question. Only additional adjustment. Okay. Just keep a track of it. Which the increase in turnover is 25,000. All right. We'll see to that. So this is fair enough with the question. We'll straight away deal with the answer. Not a big deal this time. Okay. Now listen, step 1 to the answer part. Step 1, computation of short sales. And this time, I'll be writing down only the figures from question. I'll be picking out the figures and I want you to use your calculators and fill up the blanks. And after which I'll be doing it. Okay. So step 1, I'll give you time. Don't worry. What is the standard turnover? What is the standard turnover? Standard turnover is 2,40,000. You expect a 10% increase. I want you to write it. And then you will have your total, which is the adjusted standard turnover. And then you will have to reduce your actual turnover, which is 80,000. And then you get your short sales. Use your calculators, everyone, and compute the short sales. And give me the figures. Okay? Compute it. Everyone, take this down. Once you're done, give me a message stating the answer. 1,84,000. Cool. Good. All right, everyone, 1,84,000. Good. Preena, Riya, Anandu, Harshita, Devika, Bagan. I guess everyone done. If anyone is yet to complete, leave a message. All done. Okay. Fine. Now back to step 2. What is step 2? Computation of additional expense. Here you have 3 points. Which are they? Point A, which is your actual additional expense, which you will be writing it up. And point B, we have the formula based computation. I'll write down the formula. Actual additional expense, which is given to you in the question, into GPAT
Okay. Now do one thing. Compute point A, which you can straight away pull out from the question. Compute point B as well. Okay. So, and I want you to message me the answer for point B. I guess you can do that. Just give it a try. Actual additional expense, you can straight away get that. GP80, for GP80, maybe I'll help you with that as well. See, this you can write. Actual additional expense, again, uninsured standing charges, we have already mentioned, we have already discussed in the question, it is already given. And then you will have to compute GP80. GP80 is the only additional task pending. Do one thing, leave some space, I'll write down that as well. Working note number 1, computation of adjusted annual turnover. Don't write it down, I'll give you time. Annual turnover is 6 lakh. Add 10% increase, you get adjusted annual turnover. And as working note number 2, you will have to compute GP percentage, for which you will have to use the formula net profit plus insured standing charges whole divided by turnover into 100, which is net profit is given in the question as how much is the net profit? It is 90,000 plus insured standing charges is 60,000. Previous year turnover is 5 lakh into 100. Okay. So what I want you to do is, see, step 2, additional expense. Point A, you can do it. Point B, formula based, for which you will have 2 working notes which are clear on the screen. Working note number 1 is computation of adjusted annual turnover, and working note number 2, computation of GP percentage. Okay. So based on this, I want you to come up with the GP80. What is the GP on adjusted annual turnover? Come up with the answer, everyone. Give me the answer for GP80. 1,98,000 GP80. Yes. Good. Anu Thomas, good. Additional expense. Aha, you have computed third step as well. Good. Very good. We'll see if it is right or wrong. I gave final answer. Harshita. We'll check for that. 9071. We'll check for that. That's good anyways. Final. Okay, good. GP80 is 1,98,000. Everyone. Others. Harshita, we'll see to that. Matter of 2 minutes. Reena. Okay. So GP80 is done. 1,98,000 is a GP80. So you just have to substitute that in the formula. Everyone, substitute that and give me the final answer. You got GP80 as 1,98,000, and then the final answer is 9071. Harshita, good? $9071. All with me? Others, take your time, no problem. 9071, Bria.
I want everyone to get come up with answers. Thomas, Prina, Anu, Donna. Bhagan, yes. Good to see your answers anyways. Anandu, same, yes. Fine, Anandu. All cool, I guess. Anyone pending? Okay.
I guess we can proceed with. So we have point B there. Now here you will need your point C. You cannot take any assumptions as before because the question clearly states what is the additional turnover because of this additional expense. As we saw before, see the actual turnover was 80,000, whereas if the additional expense was not incurred, it would have been only 55,000. So the increase in turnover is 25,000. So I'm just writing it up. Increase in turnover is 25,000, which is nothing but 80,000 minus 55,000. So you will have the turnover is actually not your loss. The profit loss in the turnover is your loss because your GP percentage on turnover and you would have got the turnover as 30% before. When you did, you would have got the turnover as 30%. I mean GP as 30%. So 25,000 into 30%. It is okay, 7,500, whereas your actual additional expense was 9,300. Okay. So we have actually three figures to compare actually. One is 9,300, which is the actual expense. Second one is the formula base, which is 9071. And the third one is 7,500, of which we will be taking the least. And comparing these three, we can make out that 7,500 is the least amount. Okay, that's it. So now you will have to write a concluding line for step number 2, which is hence the additional expense is 7,500. Give a concluding line for this and close it up. Close your step 2. Okay, and after that, give me a message. Done. Yes, good. Good. Anandu, Harshita, yes, all good. Now, Preena, Bhagan, yes. Thomas, Alina, all good. Devika, everyone in track. Okay. So this is with the step 2. Now over to the step 3, which is the final step. Okay, step 3. Claim amount. Okay, so first will be GP percentage on short sales, and then you will have to take the additional expenses computed in step number 2. From this, you will have to reduce the the savings in additional expense, which is there in question. Okay. Much is the saving? Okay, the savings was also a saving. Saving was 2,700.
Now give me the answer of this. The claim before applying average clause. Computed claim before applying average clause.
Bhagyan, Preena, all, Harshita, Riya, Anu. Yes, 60,000 before. Good Shankar, before and after. Yes. I guess you can also compute the claim amount after average clause. Compute that as well, very easy. 60,000 is correct, and then yes, Harshida, it is 50,000. Preena, the actual claim amount is 50,000. Good. Claim amount after average clause is 50,000. If anyone want me to explain how this is, I'll do that. Drop me a message. Arun, Anu, Riya, good. Okay. Listen, I'll just explain it as well. You would have got the GP80 as 1,98,000, which is the insurable amount. And the policy amount is 1,65,000, which is there in the question. So the final claim amount will be 1,65,000 divided by 1,98,000 into your actual loss of 60,000. Okay, this is it. All cool? Good. I guess everyone is on track. Everyone has computed the answers as well. Good to know that. Okay. Devika, yes. Is any further time required for anyone? All good. Okay. So we'll start with the next question. Okay. Good going, anyways. Okay. Just a second. Hold a sec. Everyone, give me a message that if the question is complete or not. If you have noted down, anyone pending or anyone yet to complete, drop a message. Everyone, I want a message from everyone. Okay. Now again, we'll deal with a small question of this pattern from your practical question. Hold on a second. Take question number 5, page 10.40. Question number 5. Question number 5. Okay, done. All done. Okay, so we'll proceed with that. See, question number 5 is a very simple question which everybody can actually do. But still, I'll just explain this. All the adjustments we have already seen. We'll just see how it is. I'll read out the question and then we'll explain it up. Okay. On account of a fire on 15th June 2002, so this is the fire date or date of fire. It's the date of fire. First, 15th June 2002 is the date of fire. The working remained disturbed up to 15th December 2002. Okay. As a result of which it is not possible to affect any sales. The company had taken out an insurance policy with an average clause against consequential losses. What do you mean by consequential losses? Nothing but our loss of profit. See, the profit that we lost is a consequence of the fire. Okay, and hence it is also called as a consequential loss. Okay, so consequential loss is nothing to worry, is nothing but your loss of profit. Okay, so consequential loss for 1,40,000. So 1,40,000 is the policy amount. Policy amount. And a period of 7 months has been agreed upon as the indemnity period. The indemnity period is 7 months. An increase of 25% was marked in the current year's sale. So the increase percentage is given. 25% is the increase in trend. Percentage increase in trend. Percentage increase in turnover is 25%. As compared to the last year, the company marked an additional expense of 12,000 as the additional expense. Additional expense to make sales possible. Listen again carefully. The amount of 12,000 was incurred to make the sales possible, which means the entire sales that you got during the period of 15th June to 15th of December 2002, okay, the entire turnover that you received during this period is only because of the additional expense. So whatever turnover you have received, that entire turnover is because of this additional expense. All right. So in the step 2.c, you will have to take a clear note of this. We will have to see to this. And made a saving of 2,000 in the insured standing charges. Okay. So 2,000 is the savings. This is the savings that you have. Now, we have the actual turnover, actual sales from 15th June to 15th December. So, this is the actual turnover. Sales from 15th June 2001 to 15th December 2001. So, from 15th June 2001 to 15th December 2001, what does that mean? What does that? Nothing but your standard turnover. This is your standard. Okay, and the net profit for the previous year is given. Insured standing charges is given. Total standing charges is given. So the difference of this, listen. Total standing charge is 1,20,000 and the insured standing charge is 70,000. So thereby you get your uninsured standing charge as 50,000. Okay, we have done the similar pattern in our question 1. The total standing charge is given, insured portion is given. So the difference you will get the uninsured standing charge. Fair enough. Turnover, the last year's turnover is given as 6 lakh. Turnover for 1 year, what is that? 1 year before the rate of fire, which is nothing but your annual turnover. Okay, so we have all the data in the question. We have the policy amount, additional expense, savings and additional expense, actual turnover, standard turnover, annual turnover, and everything is there. So, back to our normal procedure, we'll have to start with step 1. Before that, as book note number 1, basic data, you just have to write this, okay, this part. Just compute the uninsured standing charges. Since that is not straight away given in the question, it is better you take it down. Okay, compute this or write it down. After it's done, give me a message. Okay, this is what you have to do. Note this part. After you take this down, give me a message. Done, Shankar, yes, everyone. Priya, Sabrab, Madra, Varun, Anandu, Harshita, Thomas, all done. Anu, Reena, yes, good. All done? Okay. So, back to our usual steps. Step 1. Which is computation of short sales. Excuse me. What is the standard turnover? What is the standard turnover? Excuse me, you can do the increase percentage. Percentage increase. 25% is the percentage. Percentage increase. Compute that. And then you get the adjusted standard turnover. Adjusted standard turnover. And then actual turnover. You get the short sales. Everyone, compute the short sales. Compute the short sales and give me the answer, everyone. 2,30,000, good going. 2,30,000 is the short sales. Riya, Preena, Shankar, Donna, all good. Devika. Yes. All in loop. I guess few more are there to message me. Thomas, Bagin, Anandu. Where is the answer, Anandu? Same answer, yes. Madhura, yes, good. Varun, Alina, Bagin, Saurav. All done. All cool. So you got the short sale. Step 1 is clean. Now the step 2, which is computation of additional expense. And for that, the first one is the actual expense. And next one is formula based. Wherein the actual expense is given in question. has 12,000 and formula based one, you will have to write down the formula, and everyone write down the formula each and every time so that you are by heart with that. Okay, don't skip writing the formulas. If it was in the class, I would have been able to check it, but here I want you to do justice to yourself. Write down the formula each and every time. Please don't skip on that matter. Okay. Okay. In from next time, maybe we'll think about creating a WhatsApp group and we'll post the updates in that. I want the notes also to be seen. Okay. I'll definitely get hold of that as well. Actual expense into GPAT divided by GPAT plus uninsured standing charges. Okay, so we know how much is the actual expense, we know uninsured standing charge, and the task for you is GPAT. Harshita, good? GPAT is 1,75,000 and the formula answer also you have come up with. Good. Everyone, others also, compute both. Everyone come up with both the answers. 1,75,000 and 9,333. Take your time, everyone. Not an issue. Take your time and give me the answer. And then the GPAT is 1,75,000, yes. GPAT, yes, good. Anu. Shankar. Shankar, you have already run with the claim amount. Too good. Good. 64,000 is correct. GPAT Varun, correct. Riyaz, correct. Harshita, you are right. I guess everyone is coming up with the final answer. Okay, Thomas. Thomas, why don't you type the figures as well? Won't that be good? Shankar, okay. Okay, so let's proceed with. Okay, I'll just write down the step 3 as well. If anybody has missed out in between, okay, I'll just mark step 3. As I said, the entire turnover is only because of the additional expense. Okay, the entire turnover is only because of the additional expense. So the actual turnover you will have to get hold of. Actual turnover is 70,000 into your GP percentage. You would have already computed it as 25%. So it will be 17,500. So you have 3 points actually in step 2. Point A, the actual expense was 12,000, and point B, it was 9,333, and point C, it was 17,500. So taking the least of all these three, you get the additional expense as 9,333. Okay, good. 9,333 is the additional expense, and then over to your step 3, which can be done. Step 3 is nothing but you will have to club in step 1 and step 2. Good that many have come up with answers, but for the sake of it, I'll just write it down as well. Step 3, GP on short sales GP on short sales. Additional expense you will have to add with that, which is 9,333. And then you will have to reduce the savings, which is given in the question. How much is the savings? It is 2,000. So you have to reduce 2,000. So you get 66,833. Sorry, it is 64,000. $64,833 has the claim amount before average clause, and then you will have to compute the claim amount, which is the final step, the claim amount after average clause as well. Okay, you just have to apply the formula, which is the insurable amount divided by GPAT into the claim before average clause. Okay, and yes, majority has come up with answer. Too good to see that. All fine. Anandu, Riya, I guess Harshita, Shankar, they are already have done with it. Very good. Too good. Yes. Yes, Shankar. The policy amount is higher than GPAT. We cannot claim an amount higher than our actual loss, right? If the policy amount is, okay. See, okay. I'll come up with the answer, Shankar. Okay. Listen. So Shankar's question is just this. Listen. Policy amount. We'll take an example. Policy amount is, let's say, 1,50,000. GPAT, or rather, the insurable amount. Okay, the amount which you should take the actual insurance for, insurable amount, is 1 lakh. Okay, so if the policy amount is more than the GPAT, which means you should have actually taken it for only 1 lakh, but you took an additional estimated something, some expense, some losses more, and you took a higher policy amount of 1,50,000. We definitely don't have to apply average clause because we have estimated the future losses and we took a policy higher than that. So in that case, you don't have to take or you don't have to apply the average clause. Okay, here average clause is not applicable. If your policy amount is more than your GPAT or rather the insurable amount, you don't have to apply for the average clause because already you have said the insurance company that see, I have taken so much of policy amount. So the claim amount before average clause and claim amount after average clause will be exactly the same. This step will not be required. Not in this case, but in the other case, if your policy amount is greater. Okay. Is that clear, Shankar? Any further clarification required on that? Good. Yes, fine. Okay. All done. Others, 51,866 is the answer. Perfect. Just message everyone if it is clear or not, if the entire things we have done with 3 questions. Just message me. Good going. Okay, Saurav, Varun, all good? Okay, Anandu. All done. Okay, so we are done with this, with 3 questions. Now, a slight more adjustments on this. See, the steps doesn't change. Okay, step 1, step 2, step 3, and in step 2, we have 2 working notes. That's it. The steps doesn't change. We have few more adjustments coming up in the way. Okay, so back to your textbook, and then question number. We can deal with question 10 now. Okay. Take question 10, everyone. Page number 10.27. Question number 10. Okay, all done. Shall we start? With give me a message, please. Do reply, no? Cool. Yes. Okay, fine. So let's start with question 10. Okay. So S Limited's trading preamble for the year ended 31st December 2001. It's a bit different question. We'll see. 31st December 2001 were as follows. So you are given the trading account. You are given the trading preamble. Okay. For the year ended 31/12. Not required to read the content. We'll see it in the go. Okay. Now the company had taken out a fire policy for rupees 3 lakh. So the policy amount is 3 lakh. Okay, the policy amount is 3 lakh. And the loss of profit. Listen. The company had taken out a fire policy for rupees 3 lakh and a loss of profit policy for rupees 1 lakh. What does it mean? We have 2 parts to be clubbed. See, earlier we learned loss of stock and then we learned loss of profit. So in this question, we'll have to answer both. You will have to compute loss of stock and also loss of profit. Both the questions or both the parts are to be clubbed. So one is both 3 lakh and 1 lakh. Both are policy amounts. Okay, both are policy amount. So policy amount. One is for loss of stock, which is 3 lakh, and the other one is for loss of profit, which is 1 lakh. Okay. And the indemnity period is 6 months, and the date of fire is 1/4/2002. Okay, date of fire is 1/4/2002, and the entire stock were gutted with nil salvage value. The entire stock was lost. You have not received any amount out of it. Okay. The next quarter sales from 1/4/2002 to 30th of June 2002. Okay. So this is the period of loss. 1/4/2002 to 36/2002 is the period of loss, wherein you will have to apply for your loss of profit. Okay, and the following are the other information. Sales during the period 1/1/2002 to 31/3/2002. What does that mean? Sales during the period 1/1/2002. See, 1/4/2002 to 36/2002 is the, okay, I'll just note it down. Okay, 1/4/2002 to 36/2002 is the 5 period. And why will this be actually required? 2,50,000 sales during the period of 3 months before this fire. It will be required to compute the loss of stock. You will have to brush up what we have learned in the previous class. You will be drawing our memorandum trading account, and you will be computing the loss. I hope you are all in track of that. We'll see anyways. Okay, so the sales is given, which we'll be using. We'll see, and the purchases during that period is also given. Okay. Okay, purchases, the same period manufacturing expenses. So we have the data of from 1/1/2002 to 31/3/2002. Of this 3 months, we have sales, we have purchases, and we have manufacturing expenses with us. Okay, of these three items are there for our period. Okay, now sales during the period 1/4/2002 to 36/2002. This is nothing but your actual turnover. Okay, during that fire, what is the turnover actually incurred? So this is your actual turnover. Standing charges insured is 50,000. Okay, you got the insured standing charges. Insured standing charges 50,000. And what is the actual expense incurred after fire? Okay, rather the additional expense. Additional expense. Okay, we have the additional expense also in picture. Okay, all done. And then the general trend. What is the general trend? In sales, there is an increase of 15%, and the GP percentage, there is a decrease of 5%. Okay, so GP 5% and sales 15% increase. Okay, one is an increase and the one is a decrease. Do one thing, students, just take this down. These are the basic data of the question. Okay, once you are done with this, because we have both the questions, both loss of stock and loss of profit coming in part. So take this down and then we'll see. Once you're done with this, give me a message. All done with that? Yes, yeah. No, that was 6 minutes before. Okay, Devika done, fine. All others? Ria, Anu, all in track? Where are others? Harshita, yes. Shankar, Varun, Reena, Anandu, good going. Okay. Bagan, where is Bagan? Good. Yes. Okay. So this is the basic data. So as I said, we have two parts to be done. First one, we'll be dealing with the loss of stock, okay, which is pretty simple, as you know. So you tell me, for loss of stock, what are the different data that you need? Okay. Not possible. Sorry. Listen. So give me a message, no? Like, how do we compute loss of stock? Send me a message. Let me see how many have actually opened their books. Memorandum P&L. Memorandum trading account. Yes. Memorandum trading account. Yes, good. Yes. Fair enough. You have actually a track of it. Good to know that. So memorandum trading account, you'll have to prepare the memorandum trading account. Okay. And which spirit's memorandum trading account? Listen, the file date. Okay, which spirit's memorandum trading account will you be preparing? From which date to which date? Any guesses? Actually, not a guess. 1/1/2002 to 31/3/2002. Good, Shankar. Yes. See, the file date is 1/4/2002 is the data file. So if it is loss of stock, you will have to compute the closing stock as on this date. Okay, you will have to compute the closing stock on as on 1/4/2002. Harshita, good. So in order to compute the closing stock as on 1/4/2002, obviously you will have to prepare the memorandum trading account of trading account for the period 1/1/2002 to 31/3/2002. And that is the reason why we had all these figures in the picture. We had from 1/1/2002 to 31/3/2002, we had sales, purchases, manufacturing expenses, and all that. This was actually required for computing loss of stock. Okay. So with that, we'll try computing or try preparing the memorandum trading account. We have sales, we have opening stock, we need purchases, manufacturing expenses. You will be getting your GP here, closing stock. So the required data is closing stock. See, loss of stock, what is the actual stock which was there on the data file? So you need the closing stock as on 1/4/2002 or rather 31/3/2002. So this will be the missing figure which you'll have to compute. All of the data are there in the question as well. Listen, opening stock. The trading account of previous year is given, yes or no? Previous year's trading account is given. So from that, you get the previous year closing stock. Where is it? Okay. You have the closing stock, which will be the opening stock of the current year. Okay. So here you have 90,000. And then the manufacturing expenses, sales and all, 2,50,000 will be the sales. Purchases will be 3 lakh. Manufacturing expenses for that period is 70,000. Now, our intention is to compute closing stock. So anyhow, there can be only one balancing figure. So obviously, you will have to compute the GP percentage, or rather, you will have to compute the GP amount. So in order to compute the GP amount, you will need GP percentage. Okay. See, do follow with me, all right? Because this is a bit different from the earlier patterns. So do follow with me. You will have to compute the GP percentage. Is it clear till now, everyone? Is it clear till now? Please respond. Shankar, okay. Preena, fine. Anu, Ria, Madhura, Sabrav, Devika, Donna, Bagin, Thomas. Yes, all good. Alina. Fine. All good, everyone. Yes, perfect. So listen, GP percentage, you will have to compute the GP percentage now. GP percentage is nothing but GP divided by sales into 100. Fine. You'll have to use this formula. And for this, GP is given 2,50,000, sales of 10 lakh into 100. So it is 25% GP. Now listen, in the question, what is it said? There's a decrease in GP by 5%. So though you got the GP percentage is 25%, how much will you be able to apply? You will have to reduce 5%, and the required GP will be 20%. Is that clear? Okay, so the required GP will be 25%, 20%. And then for computing the GP on this 2,50,000, you know on what amount you will be computing the GP, right? So on the sales of 2,50,000, you compute 20%. Okay, so the GP amount is 2,50,000 into 20%, which is 50,000. Now you compute the closing stock. Not a big deal, right? You just have to compute the balancing figure. Compute it, everyone. I'm not doing it. Do a balancing and give me the answer. What is the closing stock? 2,60,000. Shankar, good. Anu, yes. Harshida, Ria, all good. Anandu, 2,60,000. Yes. Rina, yes. Bagan, Alina, all done, I guess. Thomas, Anandu, yes. Fine, fair enough. Glad that you remember the other classes. Good. So closing stock is 2,60,000. Fine, fair enough. So this doesn't end our task. What next? You will have to apply for average close, isn't it? Closing stock is 2,60,000. This is your you close the memorandum trading account, and after that you write this. So what is the salvage? What does the question say about salvage? Message no. What does the question says? Salvage is null. Okay. So null salvage value 0. So loss of stock is nothing but 2,60,000. And now you will have to apply for average clause, right? Policy amount. How much is the policy amount? We had noted it before. For loss of stock, the policy amount is 3 lakh. Policy amount is 3 lakh. So now you tell me, policy amount is higher than loss. So do we have to apply average clause, Anu? Do we have to apply average clause? Exactly. You don't have to apply average clause here. Good. Okay. But then you have to write this note anyways. Write it this way as policy amount is greater than loss of stock. Average clause is not required. Okay, write this note. It is very important. Write this note and complete this much. So our first part is done. Loss of stock part is done with. Okay, everyone, complete this much and let me know. Give me a message with respect to that. Done. Yes. Good. Fast responses. Okay, Alina, Donna, Thomas, all done with that loss of stock part. Everyone in loop, I guess. Where is Devika, by the way? Yeah, Devika. Yes, I received your message as well. Done. Good. Fine. So that's it. That's about the loss of stock policy. Now we have the loss of profit also in the loop. Okay. For which, listen carefully. There are few adjustments required here. Okay. Few adjustments are required. So just listen carefully. Okay. Listen. Okay. So back to our usual steps. But one point that you have to note is, everyone pay attention. Listen. We have the actual turnover, right? Actual turnover is given as 87,500. So, and the previous year's turnover. This is just a working note. Okay. So previous year turnover is given as, which is previous year as like, okay, it is like 1/1/2001 to 31/12/2001. Previous year turnover is 10 lakh. So just listen, everyone. 2001 to 31/3/2001, the turnover would be, I'm just taking an apportionment, will be 3/12, which is 2,50,000. 2002 to 31/3/2002, the turnover given is 2,50,000. Listen, students. See, 1/4/2002 is the fire date. Okay, we know that 1/4/2002 is the fire date. And the previous year's turnover is 10 lakh. 1/1/2001 to 31/12/2001, the turnover is 10 lakh. Okay. So if I'm taking the first 3 months turnover, 1/1/2001 to 31/3/2001, the turnover will be 10 lakh into 3/12, which is 2,50,000. Okay. So the previous years, if I'm taking a mere apportionment, the previous year first 3 months turnover will be 2,50,000. But the question states the current year from 1/1/2002 to 31/3/2002, which is the current year's turnover, is 2,50,000. Okay. So what I'm bringing to your notice is previous year first 3 months and current year's first 3 months turnover is the same. But the question also says that there is a 25 percentage. Is it 25 percentage? No, it is 15 percentage. Sorry, it is 15 percentage. There is a 15 percentage increase in sales. Are you getting it? So by mere calculation, we got that in the previous year first 3 months and the current year's first 3 months, the figures are same. But question also states that there is an increase of 15 percentage in sales generally. And the first 3 months, it was not affected by any fire. So what actually happened is, listen, we'll have to take a further assumption here, because only once this concept is clear, we'll be able to proceed with the further. The other steps are exactly the same. There is nothing much more. But here in this point you'll have to get a grip of. So what actually happens is, when we compare these both, okay, when we compare these, and we do it as a comparison, listen, 2001 you have a turnover. 2001 you have a turnover, and 2001's turnover plus 15 percentage is 2,50,000. Clear on that? 2001's turnover plus a 15 percentage hike, you should get the current year's turnover. Okay. So what happened? This 2,50,000 is a correct figure because question clearly states from 1/1/2002 to 31/3/2002 is the turnover is 2,50,000. You cannot do any manipulation on that. But in the previous year's turnover, we actually did an assumption based. We assumed that the sales will be evenly spread throughout. So what we have to do is see x plus 15 percentage of x is 2,50,000. Okay, previous year's turnover is not known, plus you add a 15 percentage on that, you get the current year's turnover, current year first 3 months turnover of 2,50,000. And on solving this, you get x as 2 lakh. Everyone use your calculators. Okay, use your calculators in the mingo in the while. 2,17,391 will be the turnover that you get for first 3 months. Okay, of 2001. Or simply put, okay, I'll explain this again. Or simply put, in the previous year, which is the calendar year 2001, you will have to split as the first 3 months and the next 9 months. So for the first 3 months, the turnover will be 2,17,391, and for the next 9 months, the turnover will be 7,82,609. Only if it is in this manner, you can say that there was a 15% increase in turnover, and the 2002 first 3 months turnover happens to be 2,50,000. Okay, 2001 first 3 months turnover will be 2,17,391. Only then we can see that there was an increase of 15%, and the current year 3 months turnover was the first 3 months turnover was 2,50,000. Okay, we'll be dealing with the steps. Don't worry, but just get a grip of it. Why I'm saying all these is required, I'll explain that. But just understand it on the phase, okay? In the first 2001, 10 lakh, I divided it into first 3 months and the next 9 months. Only then I'll be able to compare it with the current year's first 3 months sales. So do one thing, everyone. Just note it down, okay? I'll explain it up as a working note. Just note this much from previous year turnover, okay? Just note this much. Once you note this down, I'll explain the rest, okay? Just take this much, okay? Just merely take it down. After you complete this, give me a message. Use your calculators and then work it out, work out the figures, and I'll explain. Done. Okay. I know that was 8 minutes before. Take your time, students. No, not an issue. Take your time. It will take time. Just take this down. Patiently take this down, not an issue. We'll clear it up in the next class. After you complete this, give me a message, okay? Anandu, yes. Madhura, okay. Done. Ria, Devika, Anu, Alina. Preena, Donna, Varun, Thomas, Shankar, Saurav, Harshita, Bagan. Yes. I guess everyone has given me a thumbs up, right? Okay. Anyways, we'll do one thing. It's already 4. We'll close the session, today's session, because this will take even longer time. So just have these notes. We'll resume the same question, the part of it, the loss of profit policy in the next class. Okay. So, and today's class, I'll just take a brief of today's class. What all did we learn today? See, few terms we learned. We learned what is standard turnover. We learned what is actual turnover. Actual turnover is after the fire. Okay, what is that? The actual turnover. And then the annual turnover, exactly 1 year before the actual turnover, you call, rather the fire date, you call as the annual turnover. And then we learned what is standing charge. We learned what is standing charge. Okay, just a second. I'll just listen. Uh, See, we learned what is standing charge. Standing charge is nothing but the fixed charge incurred, and this fixed charge you can divide it into two. There will be uh, insured standing charge and uninsured standing charge. Insured standing charge, what does that mean? You will be able to claim it from the insurance company. The other one, you will not be able to claim it. Okay, so we have both insured standing charge and uninsured standing charge. These are the few terms we learned today. And then we computed, we learned which are the different steps. Okay, the different steps in that. Okay, where was that? Okay. Here it is. We have 3 major steps to be done. First one is short sales. What was short sales? What is the turnover that you actually expected? But what is the turnover that you got? And the difference of that is short sales. Step 2, how to compute the additional expense. Because of this fire, you had to take a building for rent. And because you had to take a building for rent, you will definitely have an additional outflow. And that is what is additional expense. And in order to compute the additional expense, we have 3 formulas or 3 steps to be done or 3 points to be done, and the least of which will be taken. Okay, the first one is the actual one, second one is the formula based one, and then the next one was the based on the increased turnover. Okay, what is the GP percentage? We take the least of that, you get the additional expense. And over to the step 3 was you have the GP on short sales, and then what about the additional expenses? You reduce the savings. You get what is the claim before average clause, and then you compute the average clause. Okay, this is altogether what we have learned for the day. Now, everyone, everyone, give me a feedback on this. Was like, what are the areas of improvement that you need? Anything else? Any additions that you need? Was the audio, video, everything done? Was the writings okay? Did you understand the concept? Okay. So give me a message. Are you able to follow up this? Any modifications, any changes required, feel free to tell me so that we can do that in the next class. And I want everyone, okay, everyone to give me a message on this. Alina, Anu, Bagan, Devika, Donna, Harshita, Madhura, Preena, Ria, Shankar, Saurav, Varun. Everybody drop me a message. Okay. Good to know that. Happy to hear that. Okay. All right. Thank you, Donna, Shankar, Saurav, Varun, Devika, Anu, Preena, Bagin, Ria, Thomas, Madhura. Yes.